Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. I'm Joe Cusick from the Cusick Group, securities provided by MoneyBlock. Let's take a look at the technical side of the market where we look at charts and we also look at the options pricing, see what they're pricing in for potential moves. Obviously, we're looking at unprecedented territory. We're going into an election. We've had all the data, a ton of earnings. We still have a lot of earnings into next week, which we'll talk about at the closing bell at 4:30 Eastern, so join us. But Tech Talk is where we're going to break it down on the charts and in the options pricing, see what's going on. I wanted to keep it a little bit higher level because basically all day what we've seen, and for the most part this week, this is what I've been doing and I've been seeing this market-wide is that people are starting to shore up any kind of risk and looking at their positions, and basically as I'm watching the markets tick, they're getting prepared for Tuesday's election. Looking at the NASDAQ down about 9.25. Looking at the S&P 500 basically up about 50 cents, almost flat. The Russell 2000 is up 790. We see the dollar index down 171, down about 17 cents. Crude oil is down 53 cents at 44 bucks. And we continue to see gold still in the green, up about $1.90 at 13.05. Now, with that being said, what I wanted to do is just give you a little context before we get into the nuts and bolts of any trades. Bottom line is that we have an unprecedented election coming up. The amount of volatility revolved around this is incredible. This weekend, we could get headlines that come out and say, you know what, the FBI found nothing in any further emails. That could change the landscape pretty quickly. With that being said, I still think that we're going to have volatility going into the election and post-election. We'll talk a little bit about this afternoon about some of these sectors that would benefit with a Clinton or Trump presidency, but the bottom line is we're going to have volatility. So let's take a look at it. One thing that I want to note is that the internals and the breadth continue to be relatively bullish. Now, they've pulled back a little bit, but it's in a bullish range or bullish territory. The reason why I say that right now is that I actually took a look at the S&P 500, the spiders. They held up today. They challenged that 208 level, which is a critical support level, and they're now basically in the green. If you take a look at the SPY, currently the SPY is trading at, I'm going to check this out real quick. Just bear with me for a second. The SPY is trading at 208.96, so it's coming off of its worst levels. This is important because if you look at the stock right now trading at 208.96, almost 209 and some change, it's waffling right there. And the SPX cash, they haven't been able to get through that 210 level. That's where you would like to see further catalyst or momentum to the upside. But the 50-day moving average is right at 208.27. We're above that. That's midterm support. Now, it's well off its 200-day moving average at 214.64. We got IV coming in at around 29%, but what's very interesting is that gets that implied volatility ranked at right around 63%. Folks, they are pricing in next week the potential for the spiders to move up, and when I say they, that's the options marketplace, pricing into the options that they're buying and selling, the calls and puts that market makers will trade and provide liquidity for. They're pricing in the potential for the spiders next week to move in a range of being either up or down $6.50. That's a pretty significant move going into the election. There's a lot of volatility revolved around these options, around the space. Again, midterm support coming in at 208.27. That's the 50-day moving average. Expected move or range is right around $6.50, either up or down that amount. So you're basically pricing in the potential to be right at that 214 level on the spiders, which is resistance, or that 200-day moving average, or it could be down in the 202 level. If it gets down into the 202 level, it's a different ballgame. We're going to start talking about then a lot more volatility in the market, and that means that the unexpected is starting to happen. Couple sectors that have come up that I wanted to touch on in a technical respect is transports and airlines. Specifically taking a look at the ETF that tracks airlines, JETS, J-E-T-S, cool name. The underlying is trading at 24.13. Taking a look at the technical components, the 50-day and the 200-day moving averages are right at the 23.22 level. So you have midterm and long-term support right there at 23.22. Implied volatility right now is being run at around 23%. What does that mean as far as rank and expected potential violent moves in jets in this sector? Well, it's around 42% as the rank. That means it's about mid-range, so not a huge heightened expectation, but getting more into that middle range rather than the lower third or the upper third. Estimated move going into next week, both with the election and the continuation of earnings, is around 38 cents in this particular ETF that tracks the airline space. So we're going to watch that 23.22 level. That's the 50 and 200-day moving average. That's support right now. And we're going to watch that very closely to see if weakness comes in. Taking a look at the transports, there's two reasons why I love looking at the transports. One, it just gives me a good pulse on what's going on with trucking, railroads, and so forth. The other one is it gives me a pulse of what's going on in the economy. IYT is the ticker symbol for the ETF that tracks transports. It's currently trading at 145.79. Now, taking a look at the 50 and 200-day moving averages, the 50 days coming in at 143.54, and the 200 days coming in at 138.86. Now, the stock is above both midterm and long-term support. If we start to see this particular sector start to come under pressure, either due to the fact of the election, or we start to see some mixed data coming out next week. Now, we've seen strong data. When I mean data, I'm talking jobs reports. You continue to look at the commodity reports. Watch the commitment of traders reports that are coming out in the futures side, especially in the commodity markets. If you see any shift in there, both here in the United States as well as over in Europe and Asia, that could influence this particular sector, either the upside or downside. Right now, implied volatility is running at right around 23.87. That's at a ranking of around 63%. So it's in the upper two-thirds echelons of expected move by the options in the stock. Estimated move right now in the IYT is right around $3.17 for next week. Again, a pretty decent move being priced in going into next week, not only the election but earnings. I do like the relative strength here, so we're going to watch this very closely and see if those levels can hold. One last thing that I want to take a look at technically, because a lot of people have been plowing into hedging trades, and one vehicle that a lot of individual investors as well as professional institutional traders utilize and investors is UVXY, and that's the long hedge on the volatility, short-term volatility structure. In other words, the VIX. This is basically an ETF that tracks the VIX. It's it's been kicking up big time in the last couple of sessions, but otherwise has been on the downturn for the most part of the last year and a half. It's currently trading at ticker symbol is UVXY, and it's currently trading at $20.50. Their moving averages come in at 1770 on the 50-day, and that's the 50-day moving average. So we're right above that. But its 200-day moving average, it's way out there. It's at 75.50. So now you have some context. We're going to need something that's completely unprecedented next week to really get volatility in the upper echelons and this product to really move to the upside. I am expecting that volatility will continue to stick in the market even after the election, regardless of who is going to be elected. The implied volatility on this product is at 258%. That's putting it at an IV rank of 97%. It's at the highest it's been in over a year. And the estimated move that's being priced into this product is $6.48. So they're pricing in the potential for volatility and UVXY to move up either plus or minus $6.48 going into the election on Tuesday. So folks, that's your tech talk right now for the final trading day before we get of this first week in November. Keep an eye on the closing bell, where I'll be covering all of the things that we're going to need to keep an eye on next week going into the election. So until 4:30 Eastern time, have a great rest of the trading day, and we'll talk to you in about a half hour.